Welcome to 2024 Economic Preparation in the Present Channel. I'm your host, Tony. Thank you for joining me on this Thursday, August the 8th, 2024 edition. Please be sure to subscribe to this channel for the latest interpretation of financial news. We're not financial advisors, but we do interpret financial news and give you the 100% truth of what's going on in the U.S. economy and sometimes abroad as well. I appreciate your support, ladies and gentlemen, as we continue on toward the end of this week. Our thoughts and prayers are with those affected by the tropical storm Debbie, whether it be flooding rains or falling trees. We pray that all will be safe and sound as it moves through the rest of the country today and tomorrow. Now, getting to economic news, the U.S. jobless claims came out, as I told you, at 8:30 this morning Eastern time, and it actually was pretty good news considering the U.S. weekly jobless claims drop, and that helps to calm market fears. All the major indices were up today, including gold was even up today by as much as almost $40. So that was interesting to see as well. But so this is we have told you before that this is going to be kind of volatile as we head through the remainder of 5 or 6 months of this year. And so the initial claims for unemployment benefits fell 17,000 to a seasonally adjusted 233,000 for the week ending in August the 3rd. The Labor Department said it's the largest drop in about 11 months. So economists were expecting 240,000 claims. So not too bad. It dropped down. So that's good news for the initial claims. Continuing claims, however, are still very elevated, as you know. So this also helped the investors. There was in futures contracts and the betting that the Federal Reserve Bank would start cutting rates next month, much bigger than the usual 50 basis point reduction. That came to about a 58% probability from the 70% before the release. So you can tell that investors and everybody else in the Wall Street at least is thinking that the Fed is going to cut rates and that everything is going to be all gravy again, all sunshine and rainbows. But we can see here, according to the charts, the U.S. unemployment rate is still at 4.3%. And if we look at the chart going back here, you can see the values here going back a few years, a few months and a few years here. You can see that it's steadily on the increase here since we got it down to an all-time low of about 3.50%. That was back in July 2022. Now, 2 years later, approximately, it's up doubled. It's doubled from, not double, but it's moved up almost a half percentage point, 1.5 percentage points from 3.50 up to 4.30. Now, this is good news in the sense that the highest we've had, it was when the pandemic started back in 2020, was 11%, as you can see down here. But now we're on the way back up. The lowest we got it since the pandemic or after the health crisis was around 3.60, and that was in June 2022. Now, since then, it has risen all the way back up to 4.30 and is steadily rising. Because last month, the month before that, in June, it was 4.10. And so this is going to be very concerning here that even though it's just like inflation, that this is trending just like hyperinflation, even though the inflation numbers are coming down slowly or remaining the same, prices have not budged that much. So that's not a good sign. And gold prices up. Like I said, gold prices up according to Kitco News. It gained about almost $48, almost $50 it gained. Silver was up a couple points too, still below $30. So you look at that and you say to yourself, there's still a lot of volatility. People want to be in the safe assets, gold, silver, land, oil, tangible assets that they can convert their money into quickly, and safely, no matter where they're at in the world. So that's interesting too. Now, the U.S. election, the Euronav, this is another company here, a shipping company here, as you can see here, they flagged, of course, the U.S. election, the China economy as risk to shipping momentum. Right now, the shipping lanes are open, the Suez, Bosporus Straits, Black Sea, etc., North Sea. But that could change in just one black swan event. As you know, it's not just the elections, but it's also China and their big trade deficit we have with them. We also have a lot of conflict in the Middle East, outside of the Middle East, where shipping pirates are taking a lot of control of a lot of these shipping lanes. And they could be coming back in the future to take control of these lanes here. And so there's a lot of black swan events that can happen from now until December. And so because of which, those are threats to the U.S. economy, but also the UK economy, the Euro, Australian, Japan, South America, the BRICS nations who have their own currency now. They're trying to have their own union, I should say, that's trying to rival the dollar. So many container ships are taking a longer route around the Horn of Africa due to attacks by Yemen's Houthi militants in the Red Sea region. And what they say is solidarity for the Palestinians in Gaza. So you'll also know that a change in presidency. So all of these here are swan events, black swan events that could slow down global trade or affect, the freedom of commerce and movement, as we know. And also oil prices. Oil prices right now have not risen too much. As you can see, I believe it's around crude oil here. I'm going to go back up here. Crude oil is at $76 a barrel, so it hasn't risen too much. But as you know, this is very volatile. If we get one little shutdown or something of a pipeline or a shipping lane, then this crude oil price could easily go above $96 to $100 a barrel. And then that could be very bad news for the shipping, for transportation, for utilities companies, in terms of, they have to pass that cost on to us if something like that should go down. Right now, crude oil is at $76.11. It rose up just a little bit. But right now, many people believe that gasoline prices have seen their summer peak. But like I said, we're one event away from something big happening, and all of that can change. Just like the rate cut in September, if unemployment rate goes higher this month, if it spikes higher, then the rate cuts may be off the table. That's what the Federal Reserve Bank was saying, that they're going by a data basis, a case-by-case basis. So just keep that in mind, but continue to press forward. We have much to be thankful for, much to continue to grow, and I know many of you have already downsized and planned and strategized, and we just don't know, and that's very good. I encourage everyone to continue, because there's so much more that all of us can do as a community, as a nation, as a family, and friends to, just get better at sustaining, being more self-sustainable in our communities and in our neighborhoods, because that's what's the name of the game. The government can't do everything. They won't do everything for us, as we know, as we head into this kind of slowdown, a recession, or whatever you want to call it at the moment. So continue to prepare, be blessed. I'll be back with more information later this week as we continue to see the earnings come out later in the third quarter and into the fourth quarter of this year. And also, we're going to be watching out for that unemployment rate to see if it continues to tick up from 4.3% in the next 2 months here to over 5%. So we're going to see how that looks coming up next month here shortly, to our end of this month, I should say, rather. Take care. God bless. Talk to you soon.